The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Afternoon from TFNN. Welcome to the January 26th. Is today the 26th? I believe it is. It's the January 26th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free, pick up that phone, dial on in, 877-927-6648, 727-445-1044 for all our international listeners out there. And, of course, you can send me an email, steve@tfnn.com, and in the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow traded up 32 points at 20,100 even Steven. You've got the S&P off a point, trading at 2297. NDX 100 up 8 points. NASDAQ Composite is flat. Russell 2000 down 6. Semis are off 8 points, about 0.8%. New York Stock Exchange down a tad. Wilshire 5,000, pretty much flat. Gold is off $9 and gaining. Interesting. Silver is down 16 pennies. Light sweet crude up a buck, leading the charge here to the upside. You've got Charter Communications up nearly $19 or 6%. Sherwin-Williams painting the town green up $24. That's nearly 9%. United Rentals, URI, up 12.25%, $14. Tesaro up 14, Biogen up 6. To the downside, Whirlpool. Whirlpool not having a good day, down 8% off $16. I believe that's really in a consolidation pattern, fairly large consolidation. Hopefully we'll get a chance to take a look at that. Cimpress NV down $11. World Acceptance Court off $14. F5 Networks down 12. Vertus down 12. McKesson Corp is off $12 as well. So would love to hear from you. Where do we want to begin? I think where we begin is taking a look at Goldilocks. We talked about a number of things yesterday. Certainly one of them was with regard to gold and what it was doing and the critical level that it had traded to and rejected during the day. Now, that level is under attack again today. That is Stevie's red line. Now, we're looking at the continuous contract on my screen. The reason why I've got the continuous contract is because then I can go further to the left and show you maybe some other examples of why we're paying attention to the two red lines. You got the red squiggly line up top. That tells us whether the price oscillator on the bottom is turned up or down. In just an instant, we know that. Now, what I also know, because what we shared yesterday was we were sitting right at the zero line. We're still sitting right at the zero line. But any close today in gold below 1192, 1191, that number is going to change, by a few pennies out here. So let's just call it 1191. Any close below 1191 out here, that's going to suggest that we're going to see more of a retracement. Now, the problem is that we start to get below the zero line on that bottom panel out there. And there is nothing more bearish. You got to take this into how it's intended to mean. But there's really nothing more bearish from a bearish signal than a falling price oscillator below zero. And so we want to really be paying attention to it. The last time that we saw the price oscillator struggle in this zero area, just to give you an idea, takes us back in the time period of September. September 22nd. We sort of got above it. No, we had a turn up. We got above zero right here on about September 27th. Turned right back down the very next day. And, of course, that marked the highs up until this bottom out here on December 15th. Is the same thing going to unfold? I don't know. I'm just being, for those of you that are day traders, this is not something that you want to hang on to if you see a close below 1192. Now, there may be some other signals out there to pay attention to. We'll want to take a look at those. But this is not a good setup as we speak right now. Hey, test and rejection, right? So we're talking about $4 or $5 out here. That, as our man Tom likes to say, is a beautiful thing. So we really won't know until day's end whether or not there is a problem in the Motor City out here. As long as we're here taking a look at gold, let's go take a look at the other. And I'll kind of flip back and forth. Well, actually, let's do this here. Let's take a look at the GDX, right? Because I know that I haven't taken a look at my emails on my phone, but pretty sure there's going to be something out there asking about the miners. Now, when we take a look at the miners out here, slightly different pattern. Holding up better than gold. What I mean by that is if you look at the very bottom panel out here, we take a look at the price oscillator, you can see that we got above zero, the zero line, I should say, right around January the 14th. So we have a rising price oscillator above zero. If there's nothing more bearish than a falling price oscillator below zero, the opposite is true, right? There's nothing more bullish than a rising price oscillator above zero. And that is, in fact, what we have as we speak right now by about a penny. Or maybe we're downward below that price oscillator by about a penny. So about the 22.96 level. So if the GDX holds that area, we could have a diverging meaning between what gold is doing versus what the miners are doing, what at least the GDX is doing. Now, different picture, I think, if we go take a look at the XAU. So you've got different holdings within inside of these, right? That's why you want to go ahead and attend Tom's workshop tonight, because he's going to go ahead and rip apart, trading dust, nugget, and really just so that you can use as a great framework how to go ahead and take a look at any of the ETFs to be able to understand what the holdings are within inside of it. Now, the XAU has come back a bit here, so it's just slightly below that oscillator unchanged line, but it's right around probably 88.34, 88.35, somewhere in those areas out here. Testing it, rejecting it, no problem. Now, in the case of the miners, should we see price close below Stevie's OUL line out here? That just says, when I say nothing more bearish than a falling price oscillator below zero, we are not below zero. This then would say, and not that it can't be a meaningful top, but this would really signal to us more like retracement, and then we would want to go back and take a look at where our levels of support out there. Now, as long as we're talking about this, we should apply this to other instruments, right? We should apply this to the old Dow 20,000, so to speak, right? If we go take a look at the Dow Jones Industrials, what we're going to see has occurred this morning thus far. Let me go ahead and explode this up a bit. I mean that in the kindest sense, is that so far the test the pullback that we saw thus far inside the Dow is nothing more than a test of Stevie's red line. Now, we're way above zero out here, so that's not such a big deal out here, but it needs to close above Stevie's red line. You might say, what is that number? I'm going to have to put up a different tool to actually tell that to you. And I think it's almost the low of the day. The number is 20, is that right? Asking myself, 20,066. 20,066 is the number you need to see the Dow close above today. Otherwise, it's a problem. Steve Rhodes, TFNN.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So let's go to the next stage out here, right? We were taking a look at gold, what it needs to do. Right now, it's trading above that oscillator and change line. So it's very positive to, when things are above support, they come back, they test it, and they reject it. There's a very powerful meaning with regard to what the intent of price is. But let's look at the other side of the trade right now, the just-in-case side, right? The just-in-case side, in this case, being going to take a look at the GDX. So if we go do that, because remember, its price oscillator was above zero. So, pulling back, could be nothing more than a retracement that would be going on out here. Now, in the case of, let's get rid of this A to B equals CD pattern out here, where are we going to try to identify levels of support? Well, it's very obvious that you and I, we utilize these horizontal levels of support or resistance, which are provided to us by our friend John Logan, the TAS market profiles. Now, price is trading above the daily top of the box, 22.58. We're trading right now at 23.01. As long as price is above that, there's no message here to bail out of the trade if you're in it. Now, of course, it depends where you're in it, but I'm not referring to intraday. I'm referring to assuming that you got into it towards the bottom, like my clients and I did, and many others out there. I'm sure many of Tom's gold subscribers, also. You also take a look at volume, right? So what's going on volume-wise? 29 million shares. What's that really going against? Here's a breakout. The most recent breakout was January 5th, 135 million shares. So doesn't say that price can't move lower. Price can always come back to where things broke out, which in this case here would be about the 2182 level. So the GDX could pull back more, but you're not seeing, there will be pressure, price directional pressure, if gold starts to fall apart. But at this stage here, the overall mining equities inside the GDX, I don't recall how many there are in there, 40 or so. And it's a weighted, right? So you could take a look at Barrick Gold, ABX. We might as well do that. Barrick Gold, Newmont represent 14 or 15% of the whole shebang out here. And in the case of Barrick Gold, we're seeing that it's just got a brand new daily profile. Now, it says resistance is, or the resistance level you want to pay attention to is 1817. You clear 1817, then the A to B equals CD pattern that is underway. It just gives you more of a confirmation that it's going to achieve its objective, at least its first objective, 1984. I would say more than its first objective out here. But you're trading right into the weekly resistance line, 1795. And if it can clear 1817, doesn't have to clear it today. But if it can clear those levels, it's a beautiful thing. I don't want to steal that. I don't have to pay the royalties to OB1 for utilizing that. I think I can utilize it 3 times during one show out there. So I think we're into it for 2 times out here. So Barrick Gold looks pretty good. NEM would be Newmont. If we just take a look at that, see what it's doing. So it looks a little bit worse, right? Gap down out here, but right into support. The bottom of its TAS daily box out here, 33.69. The actual low today, 33.63. Volume, by the way, 5.3 million shares. Last time we were down here, 10.7. And that's not even going against the breakout, which was 12 million shares out here. So we've seen the things come back to support and hold, and that's really what you want to see on any kind of test. So that takes care of 14% of the mining, or around 14%, I think, of the mining sector. So didn't see any emails necessarily on that, but I know that was in the hearts and minds, of those emails that are likely to come in, or maybe they already have out here. So what do we want to take a look at next, really? And inside the den, just go ahead and post away. We got kind of a flattish market out here. We do have some levels that we want to pay attention to at day's end, but just fire them up to me. VALE. Okay, happy to do that. Yeah, just fire away, would you? VALE. That'll just make it a whole lot easier. It's almost like we're having a conversation. You punch in a symbol, and then, okay, I can give you what you're looking for. So if we take a look at, and I got to find out exactly how it is you pronounce this, VALE. Is it like a valley out there? Is it Vale, like the ski resort? And if we take a look at it, I don't know. I don't have the answer to that. But we'll just call it Vale, just like it's spelled, right? VALE, just like kale out there. I got somebody saying Valley, but man. The name of it is VALE. The ticker symbol's not screwing me. But anyway, the question was, where is this headed to? Here's the thing with regard to this ticker symbol, with this equity. It couldn't get more bullish than this. Now, you might take a look at these 3 little doji-style candles, high wave type candles out here that, in fact, do suggest that the market has lost its way. However, in utilizing terrific market profile information, what you can see here is this formed a brand new profile today, and it formed underneath price. There is no more profile bullish case than that. Usually you'll see a profile form and price will be inside that profile. When a brand new one forms, in this case here from the bullish side, and price is above that profile, I'm telling you, it doesn't mean that it can't pull back, but boy, it does not get more bullish than that. If we take a look at, just out of curiosity here, what does this equity done on a weekly basis? There's your A to B equals CD. This was probably confirmed. That was 241 million passed with 253. That was. You're on to your 1 to 1.6, right? This thing is on its 1 to 2 level. In fact, there may be a secondary A to B equals CD out here. December 5th had volume of 178 and 163. No, nothing confirmed. So what I would say is that from this chart here, let's pull this back even further. Wow, this has not even made a 0.382 retracement. It's not even made the dead cat bounce from the high of 37 buckaroonies out here. So I would suggest to you that this is on its way up towards the 1549 area. Ticker symbol there, VALE. We want to take a look at the yen. So if we're going to take a look at the yen, we got to do it really on a couple different time frames out here. One of those time frames being the 30-minute time frame. Now, it looks like on a 30-minute time frame, you're welcome there, Mike. If we take a look at it, it looks like we've got the completion of an A to B equals CD as well here. Yes, we do. And so this now says on a 30-minute time frame, we likely have a Gartley buy pattern that has confirmed. You had a nice little bullish engulfing candle right here where my cursor is. We're getting some nice follow through right now. The key here with regard to the yen has the yen bottom, which would mean have bonds bottom, which would mean has gold bottom, will be if pricing get above its 30-minute TAS market profile out here. It's already above the oscillator and change line, so that's one nice function or feature. Of course, this 30-minute bar isn't over for 5 minutes. But we'll continue serving, though, and it needs to get against above 0.8778. That's the 30-minute high. If we see that, then what we have here are confirmations, signals that this is a really confirmed by the D point A to B equals CD to the upside. Now, that is on a 30-minute basis out here. On the daily type chart, we don't have that, I'm sure. How can I be sure? Well, the only way I can be sure is let's go take a look at it. So let's go switch this up and take a look at the yen. We'll look at the continuous contract out here. And what do we have going on? You'll see, well, it's actually not too shabby. Is that right? I'm going to go take a look at this in more depth out here during this break, because price has not even gotten down to its oscillator and change line, Stevie's red line. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, back up, folks. So consensus is our polar bear says it is Vol Lee. That is BALE. So that's great. I'll just have to remember playing, what do you call that game for you? Well, badminton. No, not badminton. Where'd they get the brain fart going on out here? In any event, but I'll be right. No, I'm just kidding. Let's take a look at the Japanese yen out here. So and it is accurate. So so we do have a price oscillator, bottom panel here, below zero, nonetheless, but it has turned up. And in fact, as long as the Japanese yen is able to close above Stevie's red line, we have not even tested, then the uptrend should continue. It just becomes a problem if it gets below Stevie's red line. Doesn't mean it's going to take off, and just get super strong. But I do believe the way that the market is positioned, it is positioned for gold to head higher, not like higher, like much higher. It is positioned for bonds to go higher, not like higher, like much higher out there. Those two will head. And by the way, the market is set up to go higher as well. So all three are headed to go north. Now, the one that would create a short-term top first, or should be the market. But that's not for a couple of weeks from now. The other instruments, so the yen should move higher out here. The dollar should move lower. I mean, that is the way that the market is actually set up as we speak right now. And just because it's set up that way doesn't mean we just, accept it blindly. If we see some other changes out there, we just simply have to come back, reassess, and get ready for that next signal to tell us. Because once you start crossing some of these lines of demarcation, the question is, do you want to really sit out? Do you want to sit out that retracement, try to find a better entry point? And my answer to that would be, yeah, you would do things like that. So okay, so we've taken care of that as well. There was a question out here to take a look at. I want to EWJ is the ticker symbol. So that is some ETF for Japan. So that's kind of an interesting one. If the yen is going to head higher, let's do this out here. How can I do this? I mean, I can do it any way that I want, right? Let's do this out here. So with regard to the EWJ, let me start a new page out here. And let's go ahead and make this EWJ. And then there's going to be some market profile stuff that's going to pop up on the screen too. Let's go ahead and insert. Let's go ahead and we'll add the currency pair for the Japanese yen. We'll make it a line chart out here, if that's okay with you. That way we're just looking at market closes. We'll insert that little puppy out here. And the reason is we just want to put this currency pair out here is to see, do we have to pay attention? Oh, how did I get the euro Japanese yen? That is not what I wanted to do. It's no wonder it didn't look right. Okay, well, I know how I did it. Basically, I screwed up. And that happens, several times a day. You guys just get the opportunity to see the third time today. But we're going to get this right. Whoops. So give me a moment here. It's going to be a little bit easier to do this. We'll come back. And because we want to make sure that we evaluate these things properly, right? So when there is a correlation that we know of that we should pay attention to, we want to make sure that we always add those to the charts. There we go. So this is a little bit better out here. So now we're taking a look at the Japanese yen. In this case here, as it's moving higher, the bottom panel, it's getting weaker. When it's moving down, the way that we're looking at this, it's actually getting stronger out there. We're just really looking for the correlation here. Is it such that we have to really, absolutely pay attention to it? And I don't know. I'd have to say, no, not necessarily. Right? Not necessarily out here. So, yeah, you've got to pay attention, but I don't think we can turn that off right now. So let's do that. Let's just get back to answering what does EWJ look like. We'll go use a couple of different tools out here. First, we're going to utilize this one that gives us our market profiles. And in doing that, a brand new market profile formed today. I don't recall who asked this question inside the Tiger's Den. Let me just take TKC asked the question. So remember we looked at, I forget what instrument came up. Oh, it was volley out there, right? Just as if we were playing volleyball. And so in this case here, we said, hey, there's nothing more bullish than when a brand new market profile forms and price is already above that level. Well, that's what you have in EWJ. So this bodes very well with regard to this ETF for Japan. Now, let's go here and add volume on this just to see what the heck is going on with regard to any kind of volume analytics out here. So we'll add that. And the reason we want to take a look at that is because we're trading up towards this swing point high I see from October 24, 2016, 15.6 million shares. Whenever you come into a swing point, you like to see it do with volume. 12.9 million shares is what we came into yesterday. So a little bit lighter. Not unusual considering the market conditions and so forth. But on January 23rd, when it was really pushing up towards that level, was 28 million shares out here. So everything looks pretty good. In fact, if you're just doing A to B equals CD work, you'd use January 12th of 19 million shares, which was passed with 28 million shares, and this would set up a small A to B equals CD to the upside. So that looks pretty good if you are in this equity. Let's put this on what's on a weekly chart. That's kind of weird. Why did it do that? Oh, it must have done that because I've got the currency pair on a daily basis on here. Let's just kibosh that whole thing and get rid of that look. There we go. And so let's take a look at this. Certainly we can see the trend inside this has turned, right? Just a simple trend line. Well, let's pull it back a little bit further out here. The trend line that you would probably use would be, I don't know, something like this, right? So the trend here, in essence, has turned, and it's turned this week. This is a weekly chart that we're taking a look at. So that looks pretty bullish. Now, trend line-wise, you want to see it stay above the trend line. If it gets back down below, dips below for any reason, then its message is not positive. It's saying the trend is your friend, and the trend just decided, I didn't like it up here. Didn't like the altitude, so I'm going to go back and get comfortable. Now, that always says that you just would head back down to your swing points, your lower swing point base out here, which would be in the 31-ish type area. So I hope, TKC, that helps you with regard to the EWJ and what it is communicating to you and I as we speak right now. So I'm happy to take other. I don't know if there's any other out here, any other requests out here. I don't see them, so we'll just kind of surf around. But please, by all means, send me your request. Individual holdings, whatever it is you've got. Might as well add a I or two to it and a bunch of indicators. I've got somebody here that is asking about TVIX. So let's go take a look at it. Let's try to take these in order. Oh, I've got Bonnie. Okay, let's go to Bonnie first. Bonnie says, can you give me an entry point in TGB? Well, let's go do that for Bonnie. What was that one? TGB. TGB. Is that Taseko Mines? I don't recall. Yeah, it is. Taseko Mines, an entry point. Well, this thing has been a rocket ship out here, Bonnie, and I do mean a rocket ship. So the entry point is let's work on it during this break. When we come back, we'll find out what that would be. My guess is you want to take a look at maybe some other equity, because this one is running, and I don't know if I want you to chase it. Steve Rhodes with TFNN. Great.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Ticker symbol for Bonnie. Now, Bonnie, we have the weekly chart up on my screen out here. And this thing has been a rocket ship, trading at $1.43, but it's really off of a nice little bottom that it was basing out at around the 41-cent level. So it's at a heck of a nice rise. And I'm not suggesting that it's not going to continue to move higher out there, and could understand the reason why you would take a look at it. Hopefully it's not because you say to yourself, hey, it's $1.43. And so therefore, I just want to be in on, and you were going to load up the truck kind of a deal out here, because the only thing you can control is risk. Where this is headed to next is likely $1.69. You're at $1.43 out here. All market profiles on this thing are well below where we are trading. In fact, if we take a look at, if I turn that on, the lowest profile where this could pull back to as an entry price is going to be $1. So if you're going to ask me, is that a place to enter? It would be dependent upon the pullback and getting down and testing that level. Do I have any indication that it's going to actually pull back to that level? No, none whatsoever. Where would be the first entry point where this thing could pull back to? Well, if we take a look at Stevie's red line, that oscillator unchanged line out here, oftentimes an excellent level of support out here, that would say $1.34. So that's only about 9 cents away from where you're trading. Do I suggest that you take that trade? If you really want to get into this because you have a long-term view of Taseko Mines, TGB, because, it is mining molybdenum, if I said that correctly, and a number of other minerals out here, then take the $1.34 entry price, but do it like this. Take 1% of your working capital, whatever that is. 10 grand would be $100. Divide $100 by $1.34. That tells you how many shares to buy. And because it would then be a long-term holding, then just stick that in the drawer. Don't be trading it. Your risk would be the $100. If you got a $100,000 account, then it's $1,000 that you could risk 1% of your portfolio. And that offers, on stocks that are trading in that dollar range, it just offers you a nice unexpiring option. Again, I don't know what your outlook is, but if you're really trying to chase this, then that's how I would go ahead and manage that trade. That's the best advice that I could provide for you. I would say if you're just looking to get in on mining stocks, then you've got a couple of different options, right? We took a look earlier in the show at I don't know. I think we took a look at something like this, right? We looked at the GDX. And in the case of the GDX, what we said was prices pulling back and testing that oscillator on change line right now. I guess it's trading. This chart usually takes a couple of minutes here to update, but it's really trading right at about that level. Let me come back and see here if, in fact, that is the correct readout, 22.92. No, it is. It is the correct readout out here. I'd say sit tight because, again, you close below 22.92, says a further retracement is in place out here. So I would more try to time that and where that retracement could take it to for an entry, 21.82. Could be at 2067, could be it out there. So that's what I would like to see. I mean, that's what I'm suggesting that you would do out here. There are plenty of mining stocks that you could consider. If you take a look today, the ones that are performing the best, it appears, you've got Nova Gold. No, it's up 9 cents, 2%. Not a big deal, but it's up versus some of the others out there. Maybe currency related, but nonetheless, if we take a look at what Nova Gold is doing, you've got a volume of 1.4 million shares going into 2.3. We're only, we're a little more than halfway through the trading session out here, but that looks pretty good. I would say, go for that one. Consider Nova Gold more so than Taseko Mines, because this one here, on its next leg up, 584 would be the target, but it would likely a much larger target than that, or maybe VGZ, Vista Gold, right? This thing has just kind of been basing out here at the bottom. So it has a weaker than market stock out here, but at least this thing hasn't run so far away from you that, it's not worth consideration out here. So those would be two that you might want to consider. BTG, I don't know much about B2 Gold Corp out here, but this thing is a swing point from a couple days ago with 4.5 million shares, and you're into it already 3.5. So this looks pretty good too. As far as an equity, if you're just trying to get into the mining sector. So, Bonnie, I hope that all that helps you out. And if not, then give me a call back. Hey, we've got a caller on the line. We've got Mike in Portland. So let's go to Mike. Mike, thanks for calling. Thanks for holding. How are you doing this morning? It's morning time for you, right?
Yeah, it's just about an hour before lunch.
Okay, all right. What are you having for lunch?
Probably a hot dog.
Hot dog. Okay. All right. That sounds good. And how do you want to? What are you trying to do with Morgan Stanley?
So I got in on this at the Open a couple of days ago, and it's had a good little 2 or 3 days here, and was just kind of looking at this as a swing trade, and wanted to. It looks like it's going to swing back into that January 12th or 13th. Is what I was looking at, and I just wanted to see your thoughts on if you thought this might have room to run or was about exhausted.
It seems like it's exhausted. I mean, the message as of 1:48 in the afternoon, and you've nailed this well, so congrats on that. By picking this up a couple of days ago, folks, he was actually buying it really at the bottom of its daily market profile at the point of control from its weekly standpoint. That's the green line on my chart. The swing point of January 13th, is a perfect place for you to be looking at this, and that had 13 million shares. And today you're at 6 million shares. So it is suggesting to you that it has run out of energy. And because you've got that weekly profile there, that is actually has a bias. I'm going to turn off the daily out here. Are you by any chance watching us on Tiger TV?
I am.
Okay, so if we take a look at just with no price or anything like that, if we just use what's the message of these market profiles, this point of control here closer to the top of the box versus the bottom says that sellers are basically in control of this pricing area out here. So it's just another indication. It's not that it can't clear it. All records were meant to be broken. That's how Bannister was able to break the 4-minute mile. But typically, when you break the 4-minute mile, and he happened to have a little bit of wind at his back, here you've got the wind in your face. Because it's running into that resistance where it needs to have 13 million shares and it doesn't. I would say you've traded this well. I would not say this is a short, but I would say if it was just a swing trade, there's nothing wrong with taking that profit off of the table now and then buying back in at 41.74 if, in fact, that's what it does is decides to bounce around in that area.
Okay, that's kind of what I was getting to. So thank you so much for taking the call and the confirmation.
My
Enjoy
pleasure.
your show
And,
immensely.
that's great. Well, thanks so much, and enjoy lunch out there.
Oh, will do, Mr. Steve.
Yep. You bet. That was Mike in Portland. Okay, so let's see. We took care of Bonnie. Oh, there was a question before that that came in asking about TVIX. So I was looking to see what you think about being long the TVIX. I'm in at 523. Okay, so let's go see if we can help this listener, viewer out here. We'll put in the symbol. TVIX is one of the volatility indices out here. And just to make sure, those of you that might be wondering the same out here with regard to these exchange-traded notes, which are basically the ugliest thing that you can see out here. They're nasty vehicles. All the reverse splits on this really has this thing priced out at $2,729,250 a share. This is really a daily trading vehicle. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So we're taking a look at TVIX, the Velocity Shares Daily 2-time short exchange traded note out there, which means that there's really no underlying instrument other than just simply the IOU out there. No, that's not necessarily so bad, but there is nothing that is underneath this thing out here. We took a look at the reverse splits out there. Okay, so it's just basically this is not the type of vehicle where you take a look at it and you say, oh, this thing has went from here to here, and just if I got a retracement of X, that would be normal. That's not what this vehicle is all about. So you can't think of it like that. It's absolutely a day trading type vehicle. Some people hold it for longer. If you can get some periods of momentum, then I get the picture out there. Here's one of the things. This is the daily chart that we're taking a look at right now. This is a simple thing. I'm just simple-minded most of the time out here. If this is going to have momentum to the upside, just like Stevie's oscillator and change line axis support and resistance, here you can just simply use the 5-day exponential moving average as a guideline. Is price trading above it or below it? And if price is, and I'm not trying to catch the very bottom, I'm not trying to sell the exact top, but this does give you the direction that you want to consider trading this thing in. And this, you see how well it actually works out there. Go pay it. Go back and try it over long periods of time. You'll see that it works pretty well. In this case here, you can see that we're well below it. That doesn't mean that you can't take it to the long side, as our listener has. But I believe our listener is taking a look at this on a more shorter term time frame out here. So I don't know what that time frame is, but if we put the 30-minute time frame out here, and of course you can continue to use that 5-period exponential moving average. Instead here, I'm just going to go ahead and put our TAS profiles out. So what you see out here, remember when you have these TAS profiles and they continue to form below prior profiles, that's telling you momentum is to the downside out here. I'm going to turn off price right now. And what this is telling us, because if you take a look at this profile, let me do this here and turn off a couple of things. That's a little bit easier. You can see that the very bottom of the box happens to be the point of control, 525, 525, 525, and our caller is in it. I think it was. Not caller, but, caller by email, 523. Okay, so excellent, Tom. You're in at 523. Do not let this thing close below 525. So there may be a slight change in trend. The key is going to be, where is going to be the next market profile that forms on this thing out here. So, I think you're a day-ish type trader out here. I would just go ahead and I would, adjust my stop to where, you're in a 525, 531. You're at 539 right now. Maybe you use 3 bars back, the bottom of 3 bars back. I mean, there's all different kinds of ways out here. But basically, this is a horrible vehicle for trading on anything but some type of intraday time period. It just is. And so hopefully that information, if I switch to a 15-minute time frame chart for you, let's go take a look at that. We may see some different market profiles here. We do. And we can see on a 15-minute, your ceiling, your lid on this trade right now happens to be 542. You want to see it close above 542 to give you what that next level might be. What that level is, I don't know, really. Maybe add this along with that 5-period. I don't trade it, so I don't have, and I don't trade it for a reason. It's trading is hard enough as it is versus trading perhaps one of the more difficult type vehicles that you can find out here. So I wouldn't use the 5-period on this 15-minute chart, but so hopefully that helps you out. And hopefully everything that we covered today helps each of you out. But if not, send me those cards and letters. Love to get those emails. And, we'll be back at it tomorrow at 1 o'clock. Stay tuned. Our favorite polar bear, David White, he's up next because it's Thursday. We got the Tom O'Brien Show. Then we've got Andy Heck. Then we've got Tom's Workshop. Not too late to sign up for that. And I look forward to seeing you there. Take care, folks. See you on Friday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.